Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Time for a haircut, huh? Maybe a little bit. Hope you're having a good day here today. Today I'm talking to the young ones out there. Where are my little guys? You beginner investors. You need help. You're trying to find somewhere to get some help. Nobody wants to help you because you ain't got no dough yet. You're still working on it. Well, I'm going to try. I'm going to try to help you here today. What we're going to focus on is those of you that are in your 20s. You know, I do these videos for the younger investors. I do them for the older investors. I try to help everybody out here. I did a video a while back, you know, the $80,000 a year investment thing. Got a little grief for that one because people misunderstood it, but that's okay. We're going to sort of elaborate on that one today. If you're 25 years old and you got nothing, you have yet to save any money at all, what's it going to take? I want to dive in there with you here today. I want to break it down and give you some tips along the way. So let's just get started. We're going to dive right into it. We need to know a few things. I jotted down a few things on the magic board back there, but we got to know a few things to calculate this. We do this for every one of our customers. We'll walk through it with you. If you happen to have questions, need some help, but let's get started. The first thing we want to know is how much have you saved already? Well, zero, right? That's what we're working on today. We said you've saved no money. You're just getting started. You're a little intimidated. You're a little scared, whatever. We're just going to dive right in, see what it takes. Desired income. You got to come up with something at some point. You have to say, well, look, I'm 25 years old. I don't know how much I'm supposed to have, but let's take a shot here. Let's just go with $50,000 a year in today's terms, meaning what can $50,000 a year buy for you today? It's not bad. A lot of people have, that's a decent income there. If you got your dough straight, you know, $50,000 a year buys a lot. You're not really supposed to know what that number is. You're supposed to just start with something. 50, 80, 20, what, I don't know, right? What do you think you need in today's terms? Because we're going to adjust for inflation as we go, rather than guess what inflation will be. That makes a huge, huge, huge difference here, so pay attention. All right, we got other income. This could be Social Security, rental income, business royalties. Your mom gives you some money, leaves you an inheritance, whatever. What other income do you expect? To make this super simple and even more challenging for the beginner investor, we're going to say you don't expect Social Security, you don't want to expect it, you don't expect rental income, you're not the kind of person that goes and buys or sells a house, does anything like that. You're just expecting to live 100% off your retirement investments. Okay, that's fair. A lot of customers say, look, if Social Security is there, that's fine. I'll just take it. But if it's not, no big deal. Your age now. What is your current age? I'm going to say you're 25 years old. We're going to do another one here as well. But let's say you're 25 years old, no money, want $50,000, no other income. Retirement age. You know, you're not really supposed to know this age either, but a lot of people choose 65, 67, 62, somewhere in there. If you want to shoot for something earlier, then that's okay as well. Your account type. Since you're 25 years old, chances are a Roth IRA is probably where you want to be. If you don't qualify for it, we can talk about that and see what we can do to get you towards the Roth IRA or see what other options are best for you. So we're going to say you're going to use the Roth IRA. That's important because we don't have to factor taxes in this too when we get to retirement. In the Roth IRA, all the money that you save and all the growth that you get over the years is tax-free, right? So you don't have to pay anything. Inflation, we're going to say 3%, just to keep it real simple. I usually use 3%. Look, you can disagree with me. You can try for more. It's a calculation, right? You can adjust the numbers however you like, okay? So that's what we're going to do. In all instances, we are now going to assume a 9% growth rate. 9% expected returns. Oh boy, here comes the comments, right? Think about it for a second, and this is where we got off on the other video in the past. 9% is actually low. The S&P 500 in its entire history has averaged 9.8%. We're bringing it down a little bit. And you go, yeah, but inflation doesn't. We're factoring it in as we go. So we're saying a net 6% return is all you're going to expect year after year. Think about it. Focus on that for a second. I'm essentially saying 6%. So all of you that like to calculate, well, you know, an average of a 7% return, I'm shooting even lower, although it doesn't look like that. This is a really important point. 9% expected returns gross. After we take out inflation, we're saying it's a net 6% return. So actually, my calculations are making it tougher on you to hit your goal. Got me? Are we good? Okay, so if you're in this camp, and that's where you are, 25 years old, then you actually have to save $33.67, right? $33.67 in the first year. Now you have to raise it by the rate of inflation each year. We talked about that being something that you want to focus on, right? We want to increase that. So if I take the trusty calculator here and we say 3367, we divide that over the weeks, it comes out to $64.75 a week. I want you to do weekly, right? $64.75. You have a small advantage if you do a weekly deposit. $64.75, sorry. So that's actually a 4, right? That's how much you have to invest every single week to hit that goal. Is that tough? If you're 25 years old, can you do $64 a week? Some of you maybe. Some of you might say, okay, that's too difficult. I can't do it. Here's the problem. If you wait until you're 30, you say, well, by then, I'll have my job, I'll have more stable income, I'm going to save my money for a while. If that's the case, then now your actual number becomes $46.24. $46.24 if you wait until you're 30 years old. So if we scratch this off and say 30, that's your new number, $46.24. It's not bad, really, if you think about it. You didn't really hurt yourself by waiting 5 years. But even if you do that, or if you're currently 30 and you say, I haven't started yet, this is the first for me, $46.24 divided by 52, you're at $88.92. That's about 20 bucks to the equation there. So think about it. When you're young, you get a little bit of an advantage, meaning you have to save a whole lot less to get started if you have nothing. A lot of times when I do these calculations, I'll say that you've already saved some money, you have a 401k or whatever. Think about that. If you have a Roth 401k at work, $67.75, that's like nothing, right? Your employer probably matches that. Yeah, think about that. Your employer probably matches that in general. So that's where you stand. If you're 25 years old and you've got nothing saved for retirement and you want to say you're going to shoot aggressively 9%, 3% inflation, you're at $33.67 a year or $64.75 a week. I want you to do weekly because look at this stock market. Do you trust this stock market? Has she given any reason to let you sleep well tonight? No. It's wild. It's all over the place. But for you at 25 years old, 30 years old, what an advantage. You got $64.75, and sometimes the markets zip down here and you're buying $64.75 down low. Sometimes they whip up a little bit, $64.75. They go down for a while, $64.75, $64.75, $64.75. You see what I'm saying? You're buying cheaper. If you're investing in the stock market for the first time, you're probably going to be a little nervous, and that's okay. That is the equivalent to riding the world's fastest roller coaster when you first go on your first roller coaster, right? If you've been on a few of them before, it's all good. You know these things are fun. But if you've never been on one and you hop on the scariest one that there is, yeah, that's going to hurt a little bit, right? So you got to be ready for that. But like anything else in life, you want to buy cheaper when you're younger. You want the markets to fall. Your account value is going to be falling, I get it, but you want to buy cheaper. Get the bulk of those investments lower. If you had to buy pencils so you could resell them, you want to buy pencils for $1, 90 cents, 80 cents, although your average cost of all those pencils is coming down as well. Now when the price of pencils goes up to $1.10, $1.20, $1.30, you have a cost basis or an average cost around 80, 85 cents or something like that, which means you make a greater profit or a better return overall. So I can't stress it enough, man. You want the markets to fall. You want to go weekly. Now that you know roughly what that number is, you can play with the numbers. You can adjust those estimates if you want. You don't have to agree with me, but play with them, know your number, get started, even if it's not with us. I hope you keep us in mind at Jazz Wealth, of course, that's what we're here for. But even if it's not with us, go get started. You're 25 years old, put a little money away. You can't mess this up. Just go put a little bit away. I promise you, you will see comments below in this video where people say, I wish I would have started when I was 25. I might even just leave a comment to say, I wish I would have started when I was 25. So go for it. Let us know if we can help you. jazzwealth.com. Happy to be there for you. And thanks for watching. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.